Markets are absolutely on fire today. I'm going to give you a quick reaction to some of the data that we got and the implications that it has on the stock market moving forward. Let me just jump right into a couple of the reports. So the dot matrix was an important indicator that we were looking for. And what that was is it told us how the Feds saw how many rates we might get going into this year. Let me share that data with you. Fed projections show that 4 of the 19 officials, so roughly 20%, saw no rate cut in 2024. So roughly 20 to 25% of all of the Feds said the economy is too strong to cut rates at all. Then after that, we saw 7 saw just 1 cut. And so that's kind of frightening overall. So 4 of the 19 saw no rate cuts because of a very strong economy, and 7 saw only 1 cut. That's a pretty big group of majority. Then 8 saw 2 cuts. And so I think that as far as the dot matrix go, the Feds are seeing a strong economy still. And so even though inflation's coming down, and it should appear as if the keeping the rates higher for longer could do more harm, that's not what the Feds are seeing. Now, they got more data than us, and they perhaps are looking at how NVIDIA is doing, how AI is changing the marketplace, and look at Apple stock today, flying like a rocket ship. I'm going to talk a little bit about what getting this second day move on Apple means for the stock moving forward. I think it's a confirmation, a reversal in the bearish trend. But I will give you guys some indications as to what I think will happen, because at this moment it's just way overbought and should cool down. Let me take you guys into this news story real quick. Benign U.S. inflation could support stock market laggards. And this is probably one of the biggest takeaways of the day, is that this inflation coming down means it's a sign of falling U.S. inflation on Wednesday and growing hopes for interest rate cuts from the Federal Reserve could be a positive signal for large swaths of the stock market that have languished in a rally led by big tech. And so this is basically every other company that doesn't have easy access to money. This is the idea that if the Fed is motivated by inflation rates coming down, that he will give us cuts so that he doesn't put too big of a brake on the economy. But at the exact same time, we have the Feds who are looking at the same data that we're looking at, saying that they see a lot of strength, and a great deal of them are actually more hawkish. And so I think that we still have to play out the rest of this weekend to see how the market's going to respond to this data that just came out. Right now, I kind of knew they would throw a wrench in the mechanics of the S&P 500. It's not terribly a clear picture. They're wanting to keep everybody's perspective balanced. They don't want the bulls to get too excited. They don't want the bears to get too excited. And so they're basically playing both sides of the fence right now with the dot matrix and what the Fed's going to say. But the market's moving. This is the Stocks with Josh show. I'm going to take you into a couple charts. I'm going to give you guys a couple projections of where I see things going. Today's a very big day for Tesla. That's another very active news story. The Tesla stock popped. It has every reason to pop. If there's the idea that the Fed might ease rates here soon, then we would see Tesla take off, because that's Tesla's rate sensitive. But we also have the vote on Elon's pay, and that isn't looking so good. And so at bare minimum, we're going to have a volatile day with Tesla. We came down with a hard sell order yesterday, and today's move turned around and gave us a buy order. I don't think it's over just yet. We've got to see how this vote goes. All right, let's just go right into the Apple chart from here. I wanted us to look at the monthly time frame to give us a big picture view of what's happened with Apple. Apple's had a massive breakout move. The month hasn't closed, but the fact that we've gotten 2 days of this breakout and hit the price point that we did is an indication of a confirmation of the fact that Apple has finally gotten on board with the AI narrative and is positioned to get a big benefit from integrating AI into their platform. And as they said in their rollout, that AI stood for Apple Intelligence. It's a big, bold position to make. And right now, shareholders are believing them. Shareholders know that they've got the money to do whatever they want with AI and to make it happen. And that's what they're going to want to see each quarter moving forward. But this breakout is significant. Now, I think based on the line that I drew that we're pretty much near the top of that breakout. If we use the LUXALGO indicator on the highest time frame, the monthly time frame, it's showing that a max take profit at $222. And I'll be honest, I don't see why we wouldn't hit that. But we are up against that sell call, and we're up against the fact that on the Watson envelope, we also have another sell call. And so even though this is a massive up day and it confirms a stronger trend moving forward and eliminates the idea of a breakdown moving forward on Apple, the fact is that we are way overbought right now. We're way outside the Bollinger Bands. We're way outside the Watson envelope. And we're definitely in the sell zone of the LUXALGO. Now, what I would tell you guys is that I do not expect a massive capitulation moment and a return back to 165. I think the fact that we have broken above this structure means that we're going to stay above this structure for some time. I do expect us to come back and test the top of this structure, which is around 197. And yes, we could easily come back and touch 190. But I do believe that this has set a precedent for Apple moving forward, that we're going to see a strong Apple going over. I think we're going to see a very strong Apple over the next 12 months. And largely, I would say that it has brought up the lower end of the buy zone up to at least 190. But we are in a frothy market. And as I've showed you on the S&P 500, let me take you guys over there. This was the projected move that I gave on Monday and Tuesday, that we would break out and make a push up to this 5,500. Now, if you look at my chart, I was expecting this move from 53.22 on Monday to get us up to into this zone here by Wednesday. But as you can see, my little arrow pulls us back down to test structure. Do we have to come back down here? No, but it would be likely that we would digest some of this pop. And ultimately, I see a market that's pushing up to 5,500. Now, let's take a step back and look at the big picture view of the S&P 500. I'm just going to remind you guys every time I talk about it that we have extreme bearish divergence on the S&P 500, very similar to what we had back in 2021. So as we go on to hit 5,500, we are having lower momentum, clearly indicated down here in the RSI, very similar to when we were at 4,500 back in the day and ultimately made it up to 4,800. We had very strong bearish divergence back then as well. So to keep things super clear, the market loves the fact that the interest rate came down. I do not like the fact that there are so many hawkish Feds who are against rate cuts this year. That's very concerning. I think that as the Fed talks, we're going to see more volatility, but we're still at the higher end of the range, and I don't believe that we have tested every last bit of it and touched the highs that we're going to. 5,500 remains my target, which means that all of big tech can continue to go on to make higher highs right now. I gave you guys a target on NVIDIA. Let me just jump in real quick back to the NVIDIA chart. I gave you guys an ultimate target of 128. And I want to remind you guys, this is 1,280. Just keep that in mind. Because if you imagine it at 900, getting all the way up to roughly 1,300, you understand what a big move that is. It's similar now, even though we're talking about 125 getting up to 128. You know, it's a $30 move on a $1,000 stock, but it's just a $3 move on a split stock. And so this is a pretty lofty price right now of $128. That's where I see NVIDIA going here soon. And it's less important to me as to the exact price that NVIDIA will hit, and more important that you understand the significance of this 125 price line, because that's what I want you to take away. When we get some candles that close beneath 125, it means that this up move that we've been on, it's been very strong. It means that that's coming to an end. That's sort of the line in the sand. So closing some candles, especially a weekly candle back beneath 125, means that we're going to come back and test the inside of this channel. The first move would bring us back to around 112, and we'd have to see how that would hold up. Now I'm going to be doing a live reaction, more perspective on the Fed rate and the things that he says later today on Keenan Grace's page. The Stock Squad is going to be going live and reacting to the market. Appreciate you guys being here today. I'm going to wrap this video up. Peace and blessings. Hit that like and hit that subscribe if you're new to this page to get the next video. Take care, guys. Bye-bye.